A couple of times you said, okay, it's time for a tactical rally. Things have gotten oversold, washed out. That's worked a couple of times, including early in October. Got an 8% rally yesterday afternoon. You said enough with that, neutral. Why is that?
So a lot of our thesis had played out and really become consensus in the market. So our expectations were that earnings were going to be better than expected, which they were, or better than feared. They certainly were. The conditions a month ago were very oversold. Sentiment was very negative, and positioning was extremely negative, including CTAs that were very short. That has now, been a big part of this rally. And then we also thought there would be an expectation that the market would think the Fed is almost done, and that would cause a rally, and that people would think, okay, and we might be able to have a soft landing in that scenario with the unemployment rate still at 3.5%. And so here we are, fast forward a month, we got the 8% rally. A lot of those things became consensus, and then cyclicals have absolutely ripped on the thought that maybe we can get a soft landing. So it really all played out. So now we're taking a step back. Went to a neutral view, and now we're going to reassess. And I do have, overall a negative bias, overall, but we are neutral right now. Weren't
those conditions a month or so ago extreme enough that it would give some conviction that we could carry through past the midterm elections and typical seasonal tailwinds might kick in, and you might actually have a little more to it than just an 8% oversold bounce?
So I think that's one of the reasons why we went neutral, because I think those dynamics are still in place, where you still do have seasonality. Positioning overall is still very light. The issue is that the Fed funds rate right now is expected to be 5% for all of 2023.
Yeah.
That is a massive headwind for equities, right? The 2-year yield is now at 4.7%. Money market rates are going to be 5%. And so I think when you look at what the ceiling is for equities, the ceiling has now moved down, where I think the upside in a really rosy scenario now, based on where rates are and what the Fed is saying, is probably between 3,900 and 4,000 in a very rosy scenario. And then, of course, on the downside, we can talk about that. There's plenty of potential downside.
Yeah, we were showing you had thought perhaps you'd get to a point where the December hike by the Fed might be the last one, and that does not seem what we're set up for.
It does not. So a part of the rally was people thinking that they're almost done, or maybe that would be the last hike, and we thought we no longer think that's going to be the case. I mean, the key from yesterday with what Powell said, the one line is he's rather would over-tighten and be able to repair that later because they have those tools. Well, if he's in a situation where he has to use those tools, that means equities are much lower, right? Sure. So it's not a good place to be.
Most likely. Now, you mentioned cyclicals have ripped. We've been talking about how there's been this huge downside momentum in the largest NASDAQ stocks, but you were just saying you actually like those names.
We think right here they look extremely attractive relative to cyclicals. So what's happened is you've had this massive rotation really quick in the last week out of Meta, Google, Amazon, and into industrials, energy, and financials. And we think that has extended far too much. And if you look at 2023, the big concern now, especially with rates at 5%, is that the likelihood now of recession is now going up based on where rates are. So if we're going into recession, do you want to own levered companies that are cyclical at high valuations? Or do you want to own these mega cap names that are now beaten down? Valuations are very attractive. They're cheaper than industrials right now, with great balance sheets and business models that have much more secular growth that should do much better in a recession. And you're getting these right now at these extreme levels. And so at minimum for a short-term trade, we think that there's big reversion to come in the coming days and weeks.
All right. Would be an interesting turnabout and definitely a contrarian take. Appreciate it. Eric, thank you.
Absolutely. Thanks, Mike.